Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be dissecting the recent rally we've seen in the Bitcoin mining stocks or Bitcoin mining sector. In addition to that, we're going to be recapping many of our Q1 earnings interviews and the general consensus we're feeling and seeing from the CEOs in this community, including the various different business strategies they're starting to explore, including obviously mining, hosting, AI, HPC, and now the ever important energy infrastructure space. Now, in addition to that, you guys, we want to talk about the volatility in the mining sector. A lot of times it feels like we take 2 steps forward and 1 step back, which is exactly what we see in the markets today. But we're going to discuss that and look for potential opportunities in Q2 and beyond for this sector. Now, before we get into all that, take a second, smash the like button, you guys. It's a big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below which of the miners you feel is currently the most undervalued, your thoughts on Q1 earnings, and your outlook for the space for the remainder of this year. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we're back with a traditional podcast for you. We've been very busy and active with Q1 earnings podcasts. We've had about 12 or 13 of the top CEOs on the channel over the last 2 weeks. We still have IREN and Bitfarms yet to get to this month, so stay tuned for those. But Anthony, really nice to be back here and talk about Bitcoin price action, because boy, what a week it's been in the Bitcoin markets and for the Bitcoin miners.
Yeah, we've seen some interesting movements in the last week or so. Earnings obviously affected some miners, and in the main, the earnings results were fairly good. And to be honest, we expected that. You know, we looked at the price in January for Bitcoin, 42,000. Price finished at the end of the quarter 70,000. So the challenge then was to make sure you were coming out with a net income, and the majority of the miners that we've covered came out with a net income. And then if you look at free cash flow, which is basically taking all the cash received in terms of booking the revenues for the Bitcoin, and then looking at all your physical cash costs going out, then pretty much everyone had free cash flow, which means that from a cash perspective, they're able to operate within their means.
Yeah, we were definitely expecting Q1 to be kind of the banner or high watermark for the year. I want to get into your expectations for Q2 here as well, Anthony, and then we can start talking about some of the individual movers. Obviously, IREN made huge waves since their earnings announcement, massive move in share price. I'll let you get into that. I know you brought some nice visuals along as well, Anthony. But what we've been asking a lot of these CEOs in the interview is, guys, if Q1 had great overall macro conditions, Bitcoin price, pre-halving, block rewards, transaction fees, what are we going to see in Q2, Q3, Q4 if we don't see a very strong rally in the price of Bitcoin? Now, luckily, over the last few days, Bitcoin did move in a big way. We were flirting back up into the 70,000 range. However, we are seeing a pullback today, Anthony. So the $1 million question obviously is, what is the price of Bitcoin going to do? But generally speaking, how do you feel these companies are positioned going into Q2 and then the back half of the year?
The majority of these miners are in reasonable position. They're all, a lot of them are ordering. Even some of the smaller miners are ordering new machines. We had Remain now from SATO Technology yesterday. We've had Sheldon Bennett from DMG, both companies buying the latest mining machines, not in the size of orders that the Marathons, the Riots, the CleanSparks and the IRENs have been buying of late, but still buying these latest machines and getting their mining fleet more efficient. So that's something to consider, that that we talked about before the halving. You need a number of things to work for you. You need cheap energy. You need to try and get the cheapest energy available to you. You need to have a really efficient mining fleet, and you need to have some cash. And it looks like from the Q1 earnings, those earnings between January and March, many of the miners ticked all 3 boxes there. So that's Q1. Q2, obviously we had the halving in April, so Q2 rewards for the predominant part of that period will be, if the Bitcoin price doesn't rally significantly above 70,000, we're going to see some some challenges for quite a few of the miners, not even not just just a few of them. I think if you look at the margins that were achieved, and if you look at the free cash flow, the highest free cash flow I saw was about 50% of revenues. So that means that in the second quarter, even those companies, if the Bitcoin price stays at around 70,000. It's going to be, still a relative challenge, to make any significant profits. One thing we did pick up on is some of the miners now posting their revenues for additional business services that they're providing. So Sam Sabar came on and was great to highlight finally what the margins were. We'd all been speculating with the HPC on the type of margins. He's the one that's got the client. He's the one that's got the facility. He's the one that's got the power. And the margins are really good, even though they paid back, I think it was like 1.3 million in payments back for not having a high sufficient utilization in that early few weeks. And they still made 61% margins on that business. So, when some of the sort of like the Bitcoin maximists out there are saying that all these mining companies should stay just with Bitcoin, there is a case for, for some of them, if not all of them, to be certainly considering what HPC potentially has to offer. Is it a temporary solution? Who knows? But, you've got two types of model that these mining companies can use. You've got the type of model that Bit Digital have employed. They've got out there first, got the client, and then sorted out facilities, sorted out GPUs, and done it that way there. And the client's obviously happy. They're looking to double the capacity of that order to 100 million of annualized revenues. This is a company that achieved 43 million in Bitcoin mining in total in 2023. And in the first, literally 2 months, they had over 8 million. 2 months of that quarter had over 8 million in revenue just for HPC with really good margins. Then you have a number of the other miners who haven't got the clients at the moment, but what they're going to provide is they're going to provide what they call an on-demand service. So this is basically putting your power out there so that it can be utilized. It can be paid for as and when. So, there'll be companies going in there and saying, we need compute power at this level, and we're going to, this is what we're going to pay, and we need it, 70% of the time, it could be training or something like that. And so on-demand services, it's a case of how much can you utilize of your power at any one time, and it does vary. I've seen a lot of companies, achieving sort of around the 80% mark. So that's slightly different from, Sam's got a 100% model where, the client, is paying for 100%, not uptime, but they're going to provide the whole service there. So the on-demand is as and when. Now, it could be that you're, utilized constant. That's great, but there is a sort of like, something to consider when you're going into that you might not get your uptime to be 100%, and therefore the revenues might be lower. And bear in mind, when we look at the cost of some of these GPUs, and I think the NVIDIA 100s are around $40,000 per machine. The payback on the machines at the moment using IREN's model is approximately 2 years. And if the life of the machine is, say, 3 years, and we don't know at the moment what the life is, because they'll be bringing out, I think the 200 machines either out now or due to come out shortly. So the 100 machine is the current model. If you've got a year of profit, so after you've paid back the capital expenditure. So that's sort of like, that's the challenge. But when you consider more than half the miners are already actively looking at in this space, and you've got two of the biggest contracts, obviously Bit Digital have got their contracts, and you've got Core Scientific have got a big contract with CoreWeave, and they're like an enormous player in this space. They've got a valuation, I think, heading towards nearly 20 billion. So potentially their market cap's as big as the miners added together. So Core Scientific are partnering with them to provide them facilities and power to utilize their not machines, but giving them access to everything else. And so this is it sounds like a great deal for them. And again, when we see the numbers come through, we'll be able to look more clearly at it. But I think there's some very, very high points from Q1. Q2, I think Bitcoin prices at rally going to be a challenge.
Fair enough. And I'm glad you brought up the HPC, Anthony, because when we started Power Mining Analysis, one of our first discussions was we have to find a way to encapsulate this varied revenue streams these companies are getting. Now with Bitdeer getting into the seal miner hardware, and we've got HPC AI, we've got hosting, we've got prop mining. There's all different types of revenue. So that's definitely becoming more and more relevant. And this HPC trend, we're hearing almost in every discussion nowadays, Anthony. For me, you pointed out two of the big question marks is going to be the lifetime of these GPUs. And generally what I've seen in the technology evolution is when we are new in a space like AI, rapid advancement in the technology, right? So right now, maybe they're saying 3 years, but if the NVIDIA 200 is already out or close to it, who knows how long that'll last? And that obviously eats into the margin and the payback period, right? So that'll be one component to watch. The other one is going to be margin compression. And Sam Tabar brought this up as well. Right now, there's a lot of demand and appetite, but as infrastructure, data centers, electrical companies start to catch up, more and more compute power is going to come online, and we may start to see compression. Now, one of the interesting things here for me, Anthony, when I started hearing about the HPC, in my mind, I said, how are these guys going to compete with AWS and Facebook and the Metas and Apples of the world? Like, how are they going to compete with the hyperscalers? And a really interesting point Sam also brought up was a lot of times it's a direct conflict of interest if they partner with these hyperscalers. For example, AWS, if you're trying to train a large language model or an AI model, you maybe don't want one of these hyperscalers having access to that on the back end, right? And there's a lot of demand for these individual data centers, or like you say, the on-demand service that maybe the AWS, they're not entertaining those type of offers, right? So I thought that was really interesting, Anthony. And then the other component here, so we're seeing Bitcoin mining, we're seeing HPC, we're also seeing a big discussion point being energy infrastructure and the importance of this moving forward. And I know TeraWulf, it really felt like they're positioning themselves as an energy infrastructure company that chooses to Bitcoin mine at this point in time because of the return on investment and profitability. However, they see that backbone of infrastructure really as the way forward for the company. So I wanted to get your thoughts on that, because in my mind, it's almost evolving into a 3-horse race here between the actual Bitcoin mining or Ethereum staking, the crypto. Then you've got obviously the AI HPC, and then now the energy infrastructure.
Yeah, and the energy infrastructure has been discussed by quite a few of the miners, and it was interesting to listen to Jason's podcast recently where he said, they've got the largest site in the world in operation at the moment, and they're building which is going to be the largest site at Corsicana. So they've got this, two of the world's biggest sites as part of their company. That's unlikely to happen again in the future. Those sites, won't be coming along, as easy to obtain as that there. So what you'll find is that miners will have to sort of manage with more smaller sites, many more different locations. So there's a cost to that as well, because when you're managing one site, you have the economies of scale, having everything in one place. So, from a management perspective, from overheads, you can reduce those down because you don't have to have a manager at every site. You have a manager at the one site there. And, also, if there's an issue, it's on one site. You can sort of get to grips with that in one place. Whereas if you've got issues at many sites there, you're fighting fires all over the place. So that's going to be, great for the likes of Riot, for the likes of IREN, who've got these big sites. Marathon Digital also got some big sites. They've got some sites, over 200 megawatts, which they've recently purchased in this first sort of 4 months of 2024. And when I spoke to Fred in London a couple of weeks back, he indicated that by the end of 2024, they'll have around about 85% of their machines in Marathon Digital owned sites. So they're not stopping buying more facilities. They're on the look now to get those facilities. And that'll be interesting to see how they manage to do that. Having listened to what some of these other CEOs are saying in the terms of they're not readily available, you've got the likes of Bitdeer, you've got the likes of Cipher, who are building out big sites at various locations, some of them in Texas. But with Bitdeer, they've got a new site in Ohio, which is over 200 megawatts. They've got a site in Bhutan. They've got a site in Norway, all big capacity sites. So again, this is going to be like the major bottleneck. A couple of years ago, the bottleneck was mining machines. Companies couldn't get hold of mining machines, and the prices were absolutely ridiculous. Companies were paying $80, $90 a terahash for the S19s. Now, companies are paying between $14 and $16 for the S21s, which are more than twice as efficient, more than twice as powerful as these S19 machines. So the bottleneck isn't with machines. The bottleneck is with getting facilities that have access to, green energy and cheap energy as well at the same time. So it's, you've got to try, and it's not just a case of, we found a site. You've got to have a site that comes along with energy at a reasonable price. And what we're seeing now is with the halving, the cost of power has to be, getting lower, because you're just going to be, soon mining unprofitable if we haven't seen that massive pullback in terms of the difficulty adjustment. We thought we'd see a lot more inefficient miners come off the network, but with the Bitcoin price, as it has been over the last few weeks, in and around the $70,000 mark, the difficulty came down once since the halving. It's due to change today. And the last time I looked, it was actually due to go up by 1%. Yeah. So I don't know if that's the final figure. There is usually on adjustment day, there's a lot of activity, so that can change. But over the last 2 weeks, it's shown through that last 2 weeks that the difficulty is likely to go up again, which means that more miners came onto the network. Now, more miners come onto the network is a case of some of these big North American listed miners are starting to receive their machines. I mean, we've spent many podcasts talking about these mining companies like Bitfarms, like IREN, like CleanSpark, like Riot, like Marathon. They're growing not just 1 or 2 hash rate this year. They're growing circa 20 hash rate. I mean, IREN was 6 exahash at the start of the year. They're 10 now. They're going to be expected to achieve 30 by the end of December. CleanSpark were 10 at the start of the year, expected to achieve 30. That's 22 exahash. That's 24 for IREN. You could articulate that Riot Platforms have had to go from 8.4, which is their actual operating rate, although they have 12.6 exahash at the Rockdale facility. A lot of those machines aren't being utilized because they're not really doing what they're supposed to be doing there. So they're going to replace those machines and grow the hash rate. So they'll go from 8.4, 8.6 at the moment, all the way up to 31.5. So that's a 23 exahash increase. Marathon wants to go to 50. That's 20. So there's some big numbers there. You add those sort of 5 together, and Bitfarms are going from 6 to 21. So I thought that's 100 exahash just in machines coming online for 5 miners. So the global hash rate will probably continue to rise through 2024, and that means difficulty will need to get adjusted down, which means effectively all miners then are producing less with what they've got. The other variable is with regards to the Bitcoin price. We don't know. I mean, we were going to have a sort of a different show today because literally half an hour before market opened, we were all sitting rosy. There were the actual market pre-market was green. Again, all these miners that have been doing well the last few days, prices were still showing positive this morning, and all of a sudden at opening in the US, as I spoke to you before, Bryce, I don't know if it's about the US, but Asia and Europe seem to get things moving okay, and all of a sudden when the US wakes up, it's like sometimes it becomes quite dismal. So we saw literally probably 7 or 8% come off the market at literally in that first half an hour. So I had to sort of redo the graph because it's now looking more what it should do. It would have not given the right impression.
Hey, so let's get into that graph, Anthony, because you've covered a lot of ground there, and you're exactly right. We talk about volatility on this channel almost every episode. This was a very rosy week for a lot of these miners. I want to get your take on IREN specifically, Anthony, because you've been covering IREN for years and years, and we do get questions sometimes of why do we include these small scale miners like the SATO technology, the DMG, the Soluna. And it's because you guys, these companies, although these are considered industry giants now, Marathon, CleanSpark, Riot, IREN, these were small scale companies only a few years ago. And you can see how
IREN was at half an exahash 2.5 years ago when I started to cover them in my analysis. And I was the only person on social media at that time actually covering IREN. People were sort of like, why are you just covering, Marathon and Riot and Hut and Hive? This is, ridiculous. And I get questioned about this. But every company has to start. When I started doing this nearly 4 years ago, Argo Blockchain was a bigger company than Marathon and Riot. That puts it in perspective. So, Argo Blockchain were a London-based company, had over £1 billion in terms of market capitalization, had more hash rate than Riot and Marathon at the time. And so, companies start small and can grow, and it's finding which ones are the ones that can make it. I mean, there is a challenge now that the landscape, this last cycle has meant that certain miners have been able to use the benefit of being listed on the NASDAQ. That's a massive bonus to miners because it gives you an opportunity then to look at alternative ways to raise funds. Being on the NASDAQ means you can once you've qualified, qualifying period is up, and that's usually 12 months, you're allowed to literally go and raise cash through an equity raise. And a lot of these miners have made real use of that.
And Anthony, one other point on the NASDAQ, you also get included in the indices. And I know, Anthony, you brought that up the other day as well. But that's consistent buying on your stock if you get into one of those. I think, didn't Marathon just get into the S&P 60 or something?
Yes, I think S&P 600 or SP 60.
600, yeah. So you're going to have continual buying pressure there.
Yeah, so the Russell 3000, quite a few of the big miners are in the Russell 3000. And what that means is these big investment companies, these pension funds, where they go and pick, they'll go and buy, the Russell 3000. They have to buy a basket of all the shares. They can't just select them. They'll buy, the Russell 3000 will be an index, and they'll buy that. And within that index will be all the shares in there. So being part of that helps. And it has helped. I mean, we talked, I was talking about, Marathon Digital and Riot Platforms more than 2 years ago when they were the first two companies to list on the NASDAQ. They got their head start on everybody. Their world changed overnight. It really did. I mean, we're looking at, Marathon today with a market capitalization of between 5 and 6 billion. Go back 3 years ago, it was 8 billion. In 2021, it reached 8 billion. Now, it didn't reach it for very long, but what it meant is the potential was there to grow quite quickly. And being on that NASDAQ has helped them raise funds, and them two have had the head start that way. What we've seen in the last 12 months, we've seen a number of other players being able to utilise their dilution, and CleanSpark has to be including that bracket now. I mean, go back to October, they had a market cap of 600 million. Now they're at nearly 4 billion. It was certainly over 4 billion yesterday. It might still be over 4 billion, but all the shares are down this morning. But still, that's a 700% increase in the last sort of
incredible. So I'm going to bring up the chart here, you guys. So what Anthony's put together, this is a really nice segue because we can talk about IREN's share price performance here. They've made a tremendous amount of ground up in the last few weeks. So what we've put together here, Anthony, I should say, is share price performance year to date. So the gold standard or Bitcoin Standard, I guess no pun intended, Anthony, is the column on the left there, you guys. Obviously, that's the top performer year to date. Then you've got to the right of that all of the various different mining companies. So as Anthony alluded to, CleanSpark, obviously a top performer, really due to the effectiveness of that ATM usage and the fact that they've grown their hash rate so aggressively in the first few months of the year here. Then you've got Core Scientific, so Adam Sullivan and team, rock solid business plan coming back from Chapter 11. Very strong outlook for that company based on our interview a couple weeks ago. And then IREN, Anthony. And it's interesting because IREN was way down this list until just a few weeks ago, really when they announced their earnings, that $500 million ATM, that 30 exahash, they cemented themselves in the same realm as CleanSpark, as IREN, as Marathon, as one of the big top tier players, right? And then you go down from there, you can see the remaining of the group. What do you make of this chart, Anthony? And what are some big surprises for you here?
Yeah, I mean, before this last week, IREN would have been probably close to the right-hand side as possible because, they hadn't had a great year today. Share price had dropped to just over $4 from, I think it was like, share price for IREN was $7.15 on the 1st of January. So remember, just before Christmas, there was a big rally for all these mining companies towards the end of the year. And we were quoting then, the average increase for 2023 on a lot of these miners was 400% to 500%, with some of them significantly higher than that. Core Scientific had, over 1,000% increase last year. Bear in mind, it did start at 4 cents in January, so had a massive way to go. And but IREN's this last 5 or 6 days since they made that announcement to increase to 30 exahash, it's firmly put in my mind now that the market is valuing miners on basically on size of hash rate now. You could argue, well, they must be valuable on the size of the hodl, and I'm going to say not necessarily, because you've got there, if you look at the right hand side of that graph there, you've got Hive Digital, who've got nearly 2,400 Bitcoin on the balance sheet. So there's only 4 miners who've got more Bitcoin than Hive. Their Bitcoin is actually not that far short of the market capitalization. And they've got a mining business operating in 3 countries, in 2 continents. They have a HPC business that's expected to get to 20 million annualized revenues very shortly. I think in their last presentation, by the end of March 2024. So they might even now have a second business delivering 20 million of annualized revenue, and they're not getting any benefit. And they've achieved 5 exahash in mining, so they've actually increased quite nicely this year, in terms of hash rate, but it's not the size that the market's seeing from other miners. So as soon as, and it's not just about putting a number out there, because Bitfarms have put a number out there as well. Bitfarms have put 21 exahash out there, but we want to start seeing when some of that's going to happen. And they're at 7 at the moment, and they've been at 7 for a few months now, and it was 6.5 and 6, and so over the last 6 months, probably not grown more than 1 exahash. IREN actually grown from 6 in January up to 10 by the start of May. So that's a big jump, and they've got they've just increased their hash rate growth from 20 to 30. So they've added another 10 exahash on. I mean, we were talking about some companies having a challenge to get to their hash rates, and they went and added another 10 on. That makes it even worse. But all on one site. So the Childress site. And even today, I can see posts coming out from the company saying that they've learnt how to improve and deliver these facilities quicker by the fact that they've learnt lessons along the way as they've been building those sites.
Are you talking about the zigzag wiring from? I saw that exact post, and that's why, Anthony, you bring up such a good point about having everything centralized. I even think about the repairs for machines, right? If you have one location, you can have a huge lab at that location. If you've got 6 different you have to mail or transport rigs, and there's a lot of economies of scale, I think, as you put it, Anthony.
Yeah, no, absolutely. So the market this week or sort of towards the end of last week, this week, has actually started now giving credit to IREN, and it's still when you do the comparison, you look at IREN and you compare it from a valuation by exahash compared to some of those other mines, it's still really cheap. So the question is, if they valued IREN accurately, does that mean they're overvaluing some of these other players like CleanSpark and Marathon, because they get their exahash in terms of looking from a cost value and looking at it from a terahash perspective, or bring it down to the lowest level terahash perspective. You've got the likes of CleanSpark at close to $200. You've got the likes of Marathon, again significantly higher, about $130, $140. And then you've got IREN, which is literally half that amount. So it's there's still a way to go, but we started to see the green shoots, and that rise this week got them above the line. So they're actually 1% up year to date, but I'm going to say they were between 30 and 40% down at the beginning of last week. So that's probably been the biggest mover. Core Scientific, another one. People, should be paying a bit more attention to. They've come out of Chapter 11. They've come out stronger. They've come out with a plan. I'll say that again. They've come out with a plan, and they've got the warrants that will be triggered at certain levels. And by the time the share price reaches $6.93, the debt gets extinguished, because the warrants will be triggered then, and the revenues that come through will pay the balance of the debt, which at that point in time will be about $260 million. Plus, it will give them another runway of about $300 million in cash to sort of expand. And what they've been doing as well is they've been doing things really efficiently. They've been saving money. They've been, been able to reduce the debt already. It only came out Chapter 11 in the second week of January. So only 4 months or 5 months from that date, effectively. And they're already sort of like in their first quarter, they managed to get the debt reduced by 90 million by doing things better than they were doing previously.
And we even saw some expansion news out of them, Anthony. Yeah. And Core Scientific, you guys, I'm just looking, May 1st, they were trading at around $3. Even today with the pullback, they're at $4.25. So Anthony, you talk about that first tranche of warrants. That's not too far over the horizon now.
No, and they've given themselves 3 years. So they haven't said it's going to be done in 2024. They've given themselves 3 years. They've come up with a plan. And the plan, which if people have got warrants and they're struggling to understand, please do me a favor, watch the first of the two great podcasts that we had with Adam Sullivan, because on the first podcast, I had something like 40 or 50 direct messages coming into me saying, can you ask Adam to explain the warrant position, what it means to me? I've got these warrants, don't know what to do with them. And I basically said to Adam, look, you've got a lot of people out there that are unsure. Just as if they were 12 years old, just explain to them on a podcast like that. That'd be really, really helpful. And he did. He was perfect, And when it came out, the announcement about the warrants, I mean, to be honest with you, I'm an accountant. I had to read it twice for me to start understanding. So I can actually understand how so many people were struggling to get to it. But he articulated it really well. The interest payments on the debt, and it's over 600 million. I'm not going to hide it. It's a significant amount of debt. But the interest payments are quite low in these first early years, and I think by year 3 they start to ramp up. Then, so end of the day, there's a plan to get if they do things well, and they're growing and they're bringing in more efficient machines, their efficiency rate is certainly in the same ballpark now as the likes of CleanSpark, Marathon, IREN, Riot Platforms. Those 5 seem to be, in terms of growing, efficient mining machines, reasonably good power rate, everything's ticking the box for those there. And Core Scientific got themselves in that group. The only thing that's not in that group is their actual market capitalization, but it is starting to eke up. I mean, it's over 700 million now. And, when you look at the fact that they've been mining in the first quarter more Bitcoin than Marathon Digital, and Marathon have got a market capitalization of over 5 billion. So that's, 8 times more. Marathon got 400 or over $300 million of debt on the balance sheet in terms of notes, and that's a low interest. They did have 700 million, but they swapped a load of debt for about 20% of the company about 6 months ago. So they've reduced the debt, obviously gave away a massive chunk of the company for doing that, but their market capitalization has gone from strength to strength. Once the market wakes up to realise what Core Scientific are doing, maybe, and maybe the fact, having come out of Chapter 11 isn't, it's not the best thing to have on your on your CV, straight away. But you can see now that, with a different management team in place, they're starting to do things differently. And, I've said before, when I speak to other mining executives, other C-suite miners, and say to them, who stands out from you in the mining community that's from a respected point of view, the 2 or 3 names that are always mentioned, and Adam's name's in that 3. So if your peer miners, everyone's going to say they're the best, and they all do. I've seen them all. All these mining companies will go to conferences and they will 100% turn around and tell the audience why they are the best. And use a metric to do that, obviously, try and back it up there, But when you turn around and say who's the second, if you're the best, who's the next best? That's the one. That's the name you need to hear then, because that's more truthful. And Adam's name's been mentioned there. We talked about other people as well from some of the other companies there, but we're talking about Core Scientific at the moment. So yeah, they've done well. They're growing. Not growing massively, because they can't grow massively, but they've got something like 3 or 4 exahash to come online this year. That'll take them close to 25 exahash. That's pretty much, close to where some of these other miners are going to be towards the end of the year. And yet some of these other miners are valued, 3, 4, 5 times more than them. So it's going to be interesting to see that. And actually, when you look at the Q1 results from a free cash flow position, Core Scientific stole the show. They had the most free cash in Q1. They had nearly 180 million of revenues and free cash flow over 80 million. So that's a really good position to be in, and that helps. That's what you want to see. You want to pay your bills, pay your interest, and have free cash at the end of it to do other things. And that's what's adding Q2 is going to be. If the Bitcoin price rallies the same increase that it did in Q1, we won't be having these conversations. But the price at the moment is less than the price it finished at the end of Q1. So the challenge is on a little bit, but yeah.
It certainly is. And key takeaways here, you guys, always do your own due diligence, but definitely take a look at the right-hand side of that chart, because it doesn't take long, as we've seen in the case of CleanSpark, IREN, and multiple others, to move significantly from the right to the left. Now, Anthony, the thumbnail was, will or can the bull run continue for the miners? We've covered a lot of ground here. I think from a high level, you guys, we've now got political interest in crypto and Bitcoin. We've got the ETFs. We've got Hong Kong. UK is opening up to the Bitcoin market. I think this is just general volatility. This is expected, letting air pressure out of the tires. Yes, I do think the run will continue, and I would definitely encourage you guys to take a look at some of the names on the right-hand side of that chart. Anthony, I'll let you close it up here today. Great discussion, great content, and we'll see you guys tomorrow.
Yeah, I mean, you're 100% right there, Bryce. Have a look at some of those miners on the right-hand side, because the market isn't giving all miners credibility. I could put up a case for literally all those miners in the bottom 6 or 7 there without any shadow of a doubt. I mean, if you look, you can go through them there. I mean, Hut, have had the merger, and Ash is already sort of clamping down. He's only taking forward the profitable segments of the organisation. He's cut down on costs. He's told everyone, give me till Q3 and you'll see the changes that I've incorporated there. So we'll give him till Q3, and then we'll go through his accounts in Q3 and see if they're anywhere near where he expects them to be. Then you've got the likes of Bitfarms there, 33% down, and they're growing 14 exahash. They really got to show in the next 6 weeks that they can grow an extra 5 exahash, because that's their target for end of June. 12 exahash. They're at 7 at the moment. So we've got Ben on next week. That's going to be question number 1, I think, is where we expect them to be at end of June. Riot, we're going to the Corsicana site in June there. This is going to be Riot's year, make or break. So I think 2024 could be the year that Riot turn everything around. They realised, some of their operating issues at the Rockdale facility. They've ordered massive, probably one of the biggest orders you've seen with MicroBT. So again, looking at that there. Soluna. Soluna just announced another 30 million or 35 million project deal this week to get Dorothy 2 off the ground. So what they're doing at Soluna is they're looking at these smaller projects, and they're putting the projects together, and then they're going to search for the funding for these projects and bring in other partners to do it with them. And, it's a win-win for both. They've got access to some of the cheapest energy, really is some of the cheapest energy. We're talking Cipher cheap energy, with less than 3 cents a kilowatt hour. So their results were impressive as well. I mean, small company, market capitalization, well, I mean, it's probably something like, it's ridiculously, it's around 10 million. It's nothing there. SATO we had on yesterday, and you got to hear Romain talk about what they're going to be doing, and they're looking to grow when the opportunity arises. They do everything well. They came out again with a net income in the last quarter, so everything positive there. Bit Digital, we talked about Bit Digital again and again on every podcast. I'm surprised that their share price has dropped since December. They've had some massive announcements this year in terms of growth, in terms of now what we're seeing with the margins. So they're bringing in more money in terms of, HPC at the moment, effectively than they are with Bitcoin mining potentially. Bitdeer, again, this year is going to be a year of growth for Bitdeer. In 2025, we'll see some extreme growth because they're planning to get, significantly higher. I think it gets to 11 this year in terms of self-mining, and then we're going to more than double that in 2025. And then you've got Hive at the end there. They're at 5 exahash, got a HPC business, looking to grow to 8 exahash, and they're 44% down. So again, I'm scratching my head sometimes looking at valuations. But they release their results next week. So, let's have a bit of caution before the results come out, because, we've had good results from most of the miners up to now. So let's try and make sure that the last couple bringing results out in May will continue that trend, and hopefully there'll be some more updates in that presentation about how they're delivering on the HPC. But yeah, across those bottom 7 there, I've got an argument, and even the ones above those. In fact, to be honest with you, you could argue for all those miners on there to a certain extent.
And that's why we're in the sector, Anthony. That's why we love Bitcoin mining, you guys. And really, if you think about December compared to now and how many catalysts these companies have had, the position they're in now versus then, it's really a head scratcher is a good way to put it on some of these ones, Anthony. You guys, great episode today. Hit the like button. Feel free to comment, subscribe to the channel. Anthony, thanks so much. We'll see you tomorrow.